Hey guys, thanks for jumping back into the cryptoverse. Today we're going to be going over Bitcoin prices. We're going to be looking at risk management, but validating a previous model that I did using an optimization technique. We're gonna feed it in a dummy set of price data for the next several years, and then we're going to see how it responds to that data to get an idea of whether we can trust it or not. This risk model, how useful might it be? So what we're first going to do is we're going to look at the price of Bitcoin versus time, and we have this primary logarithmic regression band, and then I've drawn in the halvings here in these dashed lines that go down the page. Now, one of the things you notice is that while this is the logarithmic regression band, you can see that up here we were kind of near the top of it during this accumulation phase in the beginning of the bull run. Here we were in more of the middle of this band for quite an extended period of time. It was much longer than over here. And here we really haven't been in it that long. We were in it for a few months, and then we actually popped above it. We've come back into it now, and basically, there's not a clear cut way to say it other than we might drop down to this central line here. We may even drop down further. We may drop down to this lower band. If we look at say this chart, these logarithmic regression of Bitcoin prices, you can see that the first this yellow band here is where we found support after the first bear market. Okay, and that yellow band comes all the way up, and in fact it was support in this bear market, but then it was actually resistance in this bear market over here, and during this run up following the halving. But that band was support, and then it became resistance. So now this one was support here, but yet it has not. It has acted as support earlier this year, and now we're actually coming back down to it. It's coincidentally around $5,000. If you were to look at where the band crosses these grid points, it is actually around $5,000, which many of you know is where the 200-week moving average is, which is something that Bitcoin has never broken. However, it doesn't mean it can't break it. You always have to be able to account for anything, and it's possible that the 200-week gets broken. It's also possible that it doesn't get broken. It's possible that we hit 5,000 and then we just ride this band up for a while. It's even possible we don't even go below 6,000. There's so many different possibilities. We're not claiming here on this channel. We're not claiming we know what's going to happen in the short term. We're here because we believe in the long-term possibilities of Bitcoin, looking at the overall picture of this logarithmic growth, and we're not concerned about these these daily price movements. So that, just to put that in perspective, dropping below this band is not going to be the worst thing in the world. In fact, it would lower our risk level significantly if we were to do that. If we were to go into that band, and many of you might get you might be worried that the price might drop lower, and all I can say is if you see the long-term potential of Bitcoin, it's almost a good thing that it might drop lower, so that you can continue to hopefully accumulate at lower prices. So let's keep marching through this, because I really want to get to this validation data. So one of the first thing we're going to do is we're going to look at this these cycles. So from bottom to top, and we're going to draw a line. Okay, we're just going to draw a line from bottom to top, and we're going to do it again from the next cycle, and then we're going to do it again. So you can see that we are flattening out. It's the nature of logarithmic regression growth. We have these bubbles that are not considered to be part of this fit here, but ultimately, if other pieces of analysis I've done show that the price of Bitcoin, while it is still highly volatile, it is stabilizing, and because it's stabilizing, these bubbles, or the percent difference between these peaks and this regression line down here, they're going to get smaller and smaller. So, with that said, let's feed in some data and see how the risk model responds. So what we're going to do is we're just going to put in some price data, and you can see I basically extended where we currently are all the way out. This is clearly just a just putting in data. I can in fact guarantee you that the price of Bitcoin will not exactly do this. But if you're just looking at patterns, it seems like this is something plausible that could happen. We didn't really spend a lot of time in the aggression band here. We spent a lot longer over here. It would make sense that we would want to spend even more time in our current market cycle, which also goes along with the fact that the market cycles are getting longer. This also seems reasonable because, again, the percent difference between the peak to the primary band is getting smaller, so we would expect us to not pop out from the band quite as high. You can see we actually popped out over here, but we did not reach a higher high, so I would just consider this to be one of those short-term moves. I mean, you can see we've done it before where we came down into the band, popped back above it, and then came back into it. So it's possible that that's all that's happening right now, and that we might actually ride this band for the next couple 1 or 2 years before we pop out of it. And if we ride this band until say 2022, then if we're at the upper part of the band in 2022, then the price of Bitcoin would be around $20,000. It doesn't have to go above the band. The band is still increasing. It's just not going up as quickly as these mania phases are. So I think if you can buy the fact that this is a potential outcome for Bitcoin, I've even showed us continuing to decrease in the short term down to this central line, and then kind of just riding that central line, sometimes above it, sometimes below it, for the next couple years before ultimately going above and seeing a new all-time high of over $100,000. This is just a hypothetical case, but since I think there's a lot of people that think this is something that might happen, it's worth putting this price data into the risk model that was optimized to see how it would respond. So if we just draw the line from the low to the high, you can see we're continuing this pattern of flattening out. And then if we put in our risk model, currently we're somewhere around this point, and if we were to continue to drop, if the price were to continue to drop, then we might be going into a risk level of around 0.3 in the short term. It's possible. If we drop below the 200-week moving average, or let me say this, if we drop to the 200-week moving average, then the risk would probably get to around 0.25, I think, is what I calculated. So if it drops to $5,000, then the risk on that is going to be about 0.25, and you can compare that to the history of Bitcoin. Whenever the risk was 0.25 or lower, historically, you didn't have to sit at those price levels that corresponded with that risk for very long before you would start to see a positive ROI. So, we might go down further on the risk. We might not. That's not the point. The point is what does the risk model do? Can we validate that it might be a useful tool during this next market cycle? And you can see that putting in somewhat reasonable data for the next several years and then peaking at over $100,000 shows a slow and steady increase in the risk from where we currently are of between 0.3 and 0.4 all the way up to over 0.9. And the reason this is important, as I've mentioned before, is that each market cycle has a lower ROI from market cycle bottom. And because of that, if you were just to take some metric that doesn't account for the maturity of the asset, then the risk level would continue to get lower and lower and lower. But what we want is something that accounts for the fact that the ROI from market cycle bottom is likely going to be less in this market cycle. So if it is going to be less, let's use past trends to calculate into the model how that would affect the risk level. And you can see that even only popping up above $100,000. I think I had it go to around 140,000, but only peaking up above $100,000 slightly can still get the risk to be, point 0.92, 0.93, something like that, which is good because that means if we get to that point, most of us are going to be offloading our stack. Many of us maybe would have already sold. We would have sold portions, down here or on the way up. And then if we were to get up into this level over here, then that might be the time to say, all right, historically using this model, this is the time to sell, and we're only going to be at this level for, maybe only a couple days. So you have to be ready for that. And the nice thing is you can see that we peak in the risk model right when the price peaks, which is important. We don't want it to be a lagging indicator. We want it to be on the spot for us. We want to be able to log on to my website where I'm going to put this model, say, oh look, the risk is 0.93. Historically, this would be the time to sell your stack if you have any remaining. I'm going to do that, and potentially, you might be missing out on it going even higher. It's possible that after you sell at say 140, if that ever comes to light, it could go to 160. But that's just something you have to be okay with. You just have to be okay with what you're choosing to buy and sell. And if you're choosing to sell all of yours at a given region, then just accept the fact that it might not be the top, and be happy with the fact that you were able to see the ROI that you did. So if we were to continue on, this is what it would look like if we just color code it. So you can see that we go from dark blue to dark red, dark blue to dark red, and then dark blue to dark red. So clearly, looking at a price, future price, dummy price data for the next 3 years or so, you can see that doing something that seems reasonable and not saying something crazy like, all of a sudden Bitcoin's going to pop up to $100,000 in 2020, which goes against the entire market structure since Bitcoin has been around. It does not look like that is what's going on. So keep a level head. I think it's important to, remain well positioned in what you think is going to happen, and have evidence to back it up, and don't just say crazy things like we're going to go to $500,000 or $250,000 in 2020, because it does not follow the structure of the market at all. It would be completely against what the market has done. Similarly to that, a lot of people have called for a $1,000 Bitcoin, and if that were to happen, the price would be coming way down here, which is also historically against what the market structure says it would do. That doesn't mean it can't happen. Obviously, anything's possible, but dropping down to this $1,000 region would be significant, and it would basically invalidate almost every single mathematical model that you could draw with Bitcoin. And it's obviously that doesn't mean it can't happen, but just for me, studying math, and I really like that. I like looking at these long-term trends. I'm going to choose to operate on the fact that we are going to stay near this logarithmic regression band. It doesn't mean we're not going to fall below it at some points. If we continue, if you say we're at the top here, we're in the middle here, maybe we ride the bottom of the band here, that's fine. But dropping down to $1,000 would be a significant change in the structure of the market over the last decade. It would be significant. So that's just something to take into consideration. Even over here, drawing a future bear market. If we go back to the risk levels, you can see that a future bear market that might drop down to say $25,000 and then pop back up to $50,000, which is where this primary band would be. It would still give you a risk between 0 and 0.1 for about 1 or 2 days. And historically, you're only going to see that for a very short period of time when you drop into that risk level. Okay, so just consider that. In the same way that you're only in the peak for 1 or 2 days, or maybe a few days, you're only going to see this bottom between a 0 and 0.1 for probably a few days. It's just historically what has happened, and we're thinking that we're hoping that we can continue to use this model to make future good decisions. But again, this is not financial advice. This is just my own theory. This is just optimizing a model that I created myself, so that I can use it during this next market cycle. And then I'm just sharing it with you guys, and you can choose to use it however you want to. But again, it's not meant to be financial advice in any way. So let us march on. So, we've covered these things before where you have these buy zones and sell zones. So again, if you want to be very risky, super aggressive, you could make your buy zones all the way up to 0.5, and then you could make your sell zones between 0.5 and 1. Alternatively, you could make this a gray region where you only buy down here and you don't do anything in this region, and then you sell up here, or maybe sometimes you buy in this region and sometimes just sell, just depending on which way you enter it. So maybe you say, I'm going to buy it if we're entering the gray region from the green region, I'm going to keep buying. But if we're entering the gray region from the sell zone, I'm going to just sell. So that could be another option. And we recently went over another video. We published another video where we showed different ways to accumulate, so that you're accumulating the most when your risk is down here, and accumulating the least when your risk is up here. And then similarly, selling the most when you're up here, and then only selling in increments when you're lower. For instance, in the last run that we had, if this were your sell zones, maybe you would have sold a portion of your Bitcoin here, and then a portion of it when it got into this level, and then you would have come back down, we would have come back down, and then that would have been it. And note that we did not come all the way down. We only we're somewhere over here. This is just dummy data that I've put in, so we have not dropped all the way down to 0.3 yet. So just keep that in mind. I'm not trying to show things that haven't happened. I'm just trying to remind you that this is dummy data and not actual price data after around this point or so. So again, I've showed this one before, and I just want to show if the price were to do something like this, then it would also match the market structure of markets, the ROI from each market cycle bottom. So the first one came up here, the second one here, third one here. So you can see not only is the ROI getting lower, but the time to see that max ROI from each cycle is getting longer and longer. So we would expect the next one to take even longer, and the ROI to be even less. And this price data, doing this, even getting up to 140,000, would still show diminishing returns on your ROI from each market cycle bottom, and then I've just plotted out a potential bear market that might subsequently occur, which is just this corresponding to this price data here. So I hope that is informative for you guys. These risk models, I am posting updates to them on my Patreon account, and if you really want to see this kind of stuff, if you have questions, you can join my Patreon. It's just Into the Crypto. It's just patreon.com/IntoTheCryptoverse. I will link it in the description below. And you can see I have different levels. So if you just want to support the channel, and then see some updates like risk updates, that kind of stuff, it's just $10 a month. If you want to join a patron-only chat room, which is in Telegram, and I will send you the link to it once you join. It's just $30 a month. You'll be supplied with all the images of all charts as I produce them, and obviously anything over here. And then if you're even more committed and you want to basically correspond with me one-on-one, you can do $50 a month, and you can even I will field requests for different coins. So potentially, if you're really looking to analyze a specific coin, I will field requests from this here. And if there's a very specific graph you would like to see of a certain coin, I'll make it for you. And you can just go ahead and request that, and just give me. I mean, it might take me a couple weeks or so to make it for you, but I will do my best to get it to you in a timely manner. So That's just if you want to join the Patreon. If you want to dive in other ways, you can join my Telegram channel, which is also in the description below, and you can check out a number of other social media channels in the description. So if you guys like this content, please subscribe to the channel and turn your notifications on and like the video, and I will see you next time. Bye.